Thank you, everybody, for joining us today, and welcome to our webinar and panel discussion on cyber insurance. Right now, I'm going to turn it over to Steve Racing, President and CEO of ASMGI. He'll introduce the panel, and we'll just dive right in. Thank you, Steve.
Cool. I had a little panic. Couldn't find the technology to make it work, but I think it's working, and thanks to everybody that showed up for this, for sharing your time with us today. And we have a great topic and a great group to have this discussion. So really excited about today's webinar on cyber insurance and those kind of things. So my name is Steve Racing. I'm the President and CEO of ASMGI. We help companies really lower their risk and improve their risk posture. And we interact a lot with cyber insurance in order to be able to, get the best value from you and make sure that you're protected adequately and those kind of things. I have a fantastic panel joining us today of true experts, and I really appreciate having your wisdom at the table. And why don't you go ahead and introduce yourself, and we'll start with you, Charmaine.
Hi, everyone. Thank you for joining us today. Quick intro about me. I have about a little over 10 years now of insurance industry experience. I'm accredited and certified in cyber insurance, risk management, and privacy regulation roadmap. I am also the CEO and founder of Blackfire Cyber Insurance, and we specialize in cybersecurity insurance, tech E&O, professional liability, management liability, such as D&O, under the commercial insurance umbrella. I'm happy to be here today with you guys.
Awesome. Thank you. Dan?
Good afternoon, all. My name is Dan McMullen. I'm a partner with the law firm of Calfee, Halter, and Griswold in our Cleveland office. I practice intellectual property law and lead our firm's information technology practice, focusing on primarily on computer software and internet application development and licensing, cloud hosting and SaaS subscriptions, data rights and privacy, cybersecurity, Web3, and other IT-related transactions and dispute resolutions. By way of background, before I became an attorney, I spent several years designing management information systems for General Motors. I spent quite a few years as an adjunct professor at both Cleveland Marshall College of Law and Case Western Reserve University Law School, teaching intellectual property and cyber law classes. I'm currently the author of a treatise published by LexisNexis, the legal publisher, on the law of electronic commercial transactions, and I serve on the U.S. District Court's ADR panel of neutrals, mediating intellectual property and information technology disputes. And I'm very excited to be here with all of you and the rest of the panel for today's discussion. Thank you.
Great. Well, we're definitely glad to have you, Dan. Thanks for being here. Kent, why don't you go ahead?
Yeah, thanks. So my name is Kenton Gottschall. I am running the entire commercial sales team here at Security Scorecard. Been dealing with cyber risk ratings now for just a little over 5 years, so very familiar to where these cyber risk ratings tie into this space, in particular with the insurance realm. And it's a great panel, so welcome everyone. We look forward to this webinar.
Excellent. Thank you. Thanks for being here, Ken. I really appreciate it. Well, here's what we're going to talk about today. So we're going to spend a little bit of time doing introductions and the session overview. We're good on that, right? So then we'll talk a little bit about general information about risk in general and cyber insurance in general, right? And then we'll get into some questions that we've pre-prepared for the panelists, and then we can elaborate on it, and then we'll open it up for questions from you. And as Paul mentioned earlier, please, if you have questions, put them in the question box, and we'll try to get to them ASAP. Some of them we'll do real time, and some of them we'll wait till the end till we get to that segment. But and then we will go around the horn from a panelist standpoint with closing remarks, and then there are a few announcements that we'll make about upcoming webinars, and have an offer actually for the attendees today. So that's pretty exciting too. So some general information on cyber risk. I think it's important to really level set and gain a common understanding of what is risk, right? So this equation, anybody in cyber and in risk management is very familiar with this. It's very simple and straightforward math, right? So, but I think it's really good at explaining what is risk. So risk is, you can't have a business. So it's worth noting this. You can't have a business without taking risk, right? Everybody's heard the paradigm of risk reward, and the greater the risk, the greater the reward, and those kind of things. That's what business is all about, right? It's taking calculated, informed risks and managing that risk. And so you do it by this equation. And what we like to say is that it's known and quantifiable, right? So these risks they're generally known, right? And they're generally quantifiable. And so it's pretty simple math. If you want to reduce risk, you can either reduce likelihood or reduce impact. It's a multiplicative math formula, right? So it just makes sense. But you have to lower likelihood more than you increase impact, for example, or you have to lower impact more than you increase likelihood in order for it to apply. But it's pretty straightforward math. As it relates to risk, there are just 4 ways that you can really treat the risk, right? You can accept it. And so what we like to always say to customers is, if the cost to mitigate the risk, if the cost, the investment required to do something about that risk is more than the risk, don't do it, right? Just accept it, right? It's a very viable option. Cyber risk isn't like that, as we'll see a little bit later. The other option is to avoid it. And the metaphor that we usually use to explain this, if the risk is falling off a cliff, don't go near a cliff, right? But as we know, there are some risks that you can avoid from a business, and there are some risks that you can't avoid. And so, it's a viable treatment of risk, but you have to take on some risk in order to be in business. The other is to transfer the risk, right? And that's where insurance comes into play, and that's where we're going to spend our time focusing on today. And the other item is to reduce the risk, and that requires an investment, right? So if, again, this is where the math comes into play, right? So we can evaluate if what the cost is to reduce the risk to an acceptable level to us based on our risk tolerance, and then we can establish, does it make sense to have a cyber insurance policy, or does it make sense to mitigate the risk, right? And those kind of things. So I just wanted to highlight that today we're going to talk specifically about cyber insurance, which is transferring that risk, right? We're not going to talk about mitigating it. The other way to transfer risk is really to carry it on your balance sheet. So there are some companies, usually very large companies, that are self-insured, and they just, they carry risk on their balance sheet. But if they have a cyber incident, they pay out of their pocket for it instead of having insurance, right? So that's what self-insured means. And then the other thing I want to do from a little bit of background standpoint, the cyber risk market has changed, right? When it first started, nobody really knew what cyber risk was, either the buyers or the sellers. I would feel pretty comfortable saying that nobody really knew what it was. And so the paradigm was one size fits all for the applications and the policies and those kind of things. And it wasn't really about understanding the risk so much as it was about just selling the policies and generating the revenue, right? But if you really want to understand how the change in the market, I think it's worth pretend for a second that you're an insurance company, right? And you're obligated or required to make a profit. And so profit equals money coming in minus money going out. And so in the early days of cyber policies, there was a lot of money coming in because there wasn't ransomware and all these events or incidents that we see today. And so insurance companies were going, hey, this is great. We're generating all this revenue from selling these policies, and there wasn't any money going out. And then, as we know, there's been exponential growth in incidents and ransomware and various different security challenges, right? So the insurance companies are now paying money out, right? And so pretty soon they're paying more money out than they're taking in, and that's problematic for the industry, right? And so there are some adjustments that have to be made. And so some of the things that we hear about today are like premiums are going way up. If you have to renew your insurance, the premiums are, there are some horror stories that are just phenomenal increase, but I'll say 40 to 70% on average. I've heard stories about 400% increases, 700% increases and things like that. So we're seeing a real increase in the premium amounts, but we're also seeing a change in what's covered and what isn't covered and those kind of things. So we're going to spend our time today really digging into that and understanding that. But I thought this was interesting because the average cost, according to IBM and Ponymon, they do a study every single year, right? So the average cost of a data breach today, average cost, is $4.2 million. That's just phenomenal. So I think when you think about risk in general and the treatments of risk, you have to weigh it against this $4 million number to really understand does it make sense to do this method or this method or this method. That's an average. So there are some lower and some higher, right? This particular graphic shows you what the breakdown is. 38% of that cost is for lost business, right? So reputational loss. If you get a data breach, there are people that are bailing and they're going to the other providers, right? There are 1,000 other providers who do the same thing generally. That's the other reality about our business, right? As soon as you have a good idea and start making money, then everybody's doing it, it seems like, right? And so, but in any event, 38% of the cost is attributed to, I'll say, the soft business costs and those kind of things. 29% to detection and escalation. So that's really detecting an intrusion on your network and then escalating it to take applicable action. But I wanted to just go through this real quickly. Are there any comments from the panelists on, any of this information?
I did want to chip in really quickly, Stephen. You know how you were sharing the global average there? I recently did some research and I was specifically looking at small and medium businesses, and because a lot of times they think that they're not part of these data. However, the number that I came across in one of the studies, it was stating that the cost is over 2 million for small to medium businesses. So I want everyone to realize that these numbers that you're showing, yes, they're global, and we directly think, oh, it's those big organizations, but we want to realize it's us small and medium businesses as well.
Yep. There are so many different statistics that we could spend our time talking about, but one of them is that small business, a lot of times it's lights out, right? If there's a cyber incident, there's no way to continue doing business. So imagine, having to pay out of your pocket $2 million, right? If you're a small business, that's material. It's significant. There's no question. Cool. Well, let's dig in with some panelist questions, and we'll go through these, as we can. And I just really want to get your insights on this. So why is cyber insurance so important? Charmaine, why don't you start?
All right, so a very $1 million question, right? Literally, any company utilizing technology and humans need cyber insurance to recover from financial burden of cyber-related claims and expenses. It goes back to us transferring those risks that we cannot afford ourselves. Human error and system vulnerabilities are the most common causes of security breaches. Losses from digital threats are not covered in a general liability policy, which a lot of folks do not realize. They do not work together. There are digital threats and cyber exposure, such as data breach, which could be credit card, health information, personal information, or just information passing through that are in your network for the time being. Ransomware, cybercrime, theft of funds, social engineering, clicking on a phishing link, DDoS attack. None of these are covered in your general liability policies. Threats like these would cause digital asset damage, network damage, business interruption, regulatory investigations, recovery, lost businesses and covers, reputational harm. Your comprehensive cyber policy will play a huge role in dealing with cyber-related claims and liability lawsuits, along with first-party expenses such as legal, forensic, regulatory fees, fines, expenses, business profit loss, business interruption, and data restoration costs, and many others that I probably didn't mention right now.
Mm-hmm. So it's probably safe to say that most people, like the average person like myself, doesn't really understand where all the costs are going to come from. They're going to get hit with costs that they don't even anticipate ahead of time.
You know,
I'm sorry, go ahead.
I just wanted to chip in really quickly and say, to your point there, we think that ransomware itself is ransomware and that's it. No, even when a company gets hit with a ransomware, there's a lot of costs and expenses associated with that. So there's a lot of things that we don't see in the back that plays a huge role that are not, showing up front on the list. So.
Yep. Dan, from a legal perspective, any inputs on this?
Yeah, I was just going to add, kind of echoing Charmaine's comments. There are a multitude of ways that organizations attempt to reduce the risk they face, doing business in cyberspace. 20 or 30 years ago, it was a novel phenomenon. That is, we're going to do business online. Today, doing business means doing business online. And so one is exposed to a new variety of risks. Businesses undertake lots of different efforts and measures to reduce those at a technical level, at an operational level, at a management level. With my lawyer hat on, I would say through their contracting practices and the way they engage with third parties. All of those are levers that businesses have to try to reduce the risks they face from doing business online. But as we know, the risk, meaning the likelihood, back to your initial formula, Steve, both the likelihood and the magnitude of the consequence have grown over time. And so notwithstanding our best efforts, there are still degrees of risk that people live with. And cyber insurance is a way to capture that residual risk that we can't eliminate through more proactive measures that businesses take on a day-to-day basis.
Right. So I think it's safe to say then that it is required. Just have it, right? If you don't have a cyber policy, then you're really setting yourselves up for a lot of out-of-pocket cash. That's what it feels like to me. I'm going to move on to the next question. So how are cyber underwriters rating the risk of your organization? And Kent, maybe you can start here, because I know security scorecard is used by a lot of insurance providers, and that's one of the perspectives that really goes into, understanding like how much is the rate going to increase when it comes time to renew your policy, or even going to get a policy, right? And so that maybe you can just kind of talk through how cyber insurance companies are evaluating enterprises on this cyber front.
Yeah. It's pretty unique in a sense, right? It's not more or less like car insurance where I can go look at, how many tickets have you received in the past 5 years? How many cars have you totaled? The cyber realm of it is still evolving. It's hard, right? There's not enough data points. It's not all open source. There's not enough information for them to really craft an accurate premium in many cases. So there's a handful of different data points that they can surface today, whether that be sending you an assessment, going on site, factoring in, some of the events that have gone on recently. Are you subject to being, targeted? Are you not? But these cyber risk ratings are becoming a more and more crucial piece to the equation. There's clear correlations with, the overall letter grades and breach likelihoodness. So when they're crafting up their premiums, they're kind of looking at, okay, well, what's phase one? Before I even do any of my research, before I send you anything or review answers, I'm trying to get a baseline of where do you fall? Are you in that high risk area where, we're looking at a 7x times more likelihood of you experiencing a breach? I mean, I can't guarantee this, but I can promise you that your premium is going to be higher than someone else with an A, right? The statistics prove that you're less likely. So, you got to kind of watch this space as it's been evolving, because there's going to be more data that's crafted into the premium, so to speak. But these ratings today are really taking, a lot of attention, and it's really become a primary focus for a lot of the underwriters across the board.
Yep. That's great input, Kent. And I actually added a slide to really drill into specifically the 10 categories that you evaluate that become part of this risk score. But before I toggle to that, Charmaine, are are insurance writers really using this visibility or this data?
Definitely. It's not, you know how you earlier you talked about when we didn't know cyber insurance, right? Back then it was known as data breach insurance, and it was only for network security liability type of cases. Of course, as we all know, is no longer in a case today. So underwriters look at thoroughly review your high-level cyber posture. Beside learning about your organization and data that you might have, they look at what type of security controls your company has in place to minimize cyber exposure. The application and underwriters follow-ups include many questions relating to your cybersecurity foundation, including internal security controls, email security controls, network and IT controls, backup and recovery policies, and ransomware posture and phishing controls related to cybercrime and social engineering attacks. Now it's no longer a situation where good posture is awarded with better premiums, but rather your company will simply be required to have some minimum security practice in place to be able to obtain a cyber policy. Even startups are now expected to have MFA turned on for remote or email access, as well as backups for critical files to be able to get the cyber insurance. So just imagine that you guys mentioning earlier about increasing cyber premiums, they might 7 times, 10 times increase, or they may even come back that, hey, we'll give it to you with an increase, but you got to have certain measures in place. So it is definitely being looked at.
Yeah. Or pay a certain deductible, right? A higher deductible.
Oh, yes, definitely. And another thing is they might not even offer you the limit that you're wanting because of your poor cyber posture.
Yep. So Dan, I'm interested in your thoughts because sometimes it can feel intrusive to a user if everybody outside of my firm is evaluating my cybersecurity posture, right? And so I've met some people that are like, can't do it, can't do that, right? It's not really happening. It is happening. And so I'm just curious about the legal implications to that. I mean, is it legal to collect this data, or how do you justify that, or no?
Well, it's obviously a voluntary commercial transaction between the insured and the insurer, right? I will say, having become more actively involved in the sort of insurance aspect of online enterprise, it is a very edifying, to me, exercise to go through a cyber insurance application form that the insurers routinely provide. They have multiple survey questions, and in that form there is a pretty good outline for what a healthy cybersecurity program might look like for most businesses, and that ranges. There are common elements that one sees through these, in addition to the kind of previous history that Kent mentioned a minute ago. I mean, fundamental questions like what data do you collect, and what form does it come to you in, and very basic cyber, what I would have come to think of as cybersecurity hygiene considerations, the kinds of examples that Charmaine was referring to. Do you encrypt your data both at rest and in transit? Do you use multi-factor authentication? How do you manage your firewalls? Do you have a regular software patching program that makes sure that you're current with the latest releases? You have some form of secure remote access, VPN or otherwise, intrusion detection, et cetera. And for entities that are seeking cybersecurity coverage, the exercise of evaluating themselves by going through that process, I think, can be really, really instructive. I'll also add, and we can talk about this a little further as we go forward, apart from the purely technical, there are management aspects to this. Does your organization have a CISO, a Chief Information Security Officer? And for smaller organizations, certainly, many of them don't and may not need one, but is there someone who's responsible for that activity or function? Do you have appropriate plans in place for incident response, or business continuity or recovery? Are there assigned responsibilities associated with those? Is there training to your workforce to be familiar with those practices? And so taken all together, those things I do think can be extremely instructive. And I'll just say a word now, we can circle back on this, but from my perspective, a very meaningful part of that overall picture resides in an enterprise's contracting practices with third parties, with both vendors and customers. It is more true today than ever before that cybersecurity is a team sport. No enterprise, few enterprises, I should say, run the entirety of their information infrastructure, particularly now as all sorts of functions and services have moved to the cloud. Everything is as a service, right? That means that any given enterprise is relying to varying degrees and often very greatly on third-party service providers. Knowing how risk is distributed or apportioned through the agreements in place with those third parties can profoundly affect the security profile that business represents when it's approaching insurers. So it is intrusive. Back to your initial question, Steve. It is very intrusive in a way. I mean, sharing that information and recognizing that somebody's going to evaluate that, and you know, that may be a little hard at times to stomach, but on the other hand, it can be a very, very educational undertaking.
Yep. Awesome. Ken, why don't you elaborate a little bit on like the data that you collect and how you do that?
Yeah, without getting too far into it, right? The easiest way to kind of understand where this data is coming from is, you know, we're looking from the outside in, right? Like nothing is intrusive, and we're really giving you this hacker's eye view, right? If I want to do something malicious, I'm basically looking at the same data point saying, hey, this is my plan of attack. Now I develop my exploit based on kind of these open source findings. So what we kind of do, and what, you know, we're not the only ones in the space, there's others out there, and kind of it's the same concept where you're doing this passive scan, right? And then you're going to aggregate it into something that people can understand. So it really just comes down to one, you know, something that you can communicate risk with, but then two, really painting a picture of what your organization looks like from the internet. Now, it doesn't show everything, right? It doesn't show the internal side of things. But if you think about it, it's like looking at a house, you know, from the outside. If I see the house, you know, doesn't have the lawn cut, the windows broken, garage is open, mailbox on the ground, and there's, you know, a hole in the roof, I can assume that the inside's going to look very similar. In some cases, right, the outside's a little messy, but the inside's immaculate, sure. But it really paints this idea at a high level, really what we're looking at and what someone that's trying to do something malicious is going to use against you. So it's a very simple and easy to understand concept, but it just paints this high level picture.
And I think it's worth noting also, you know, insurance underwriters and the whole insurance team, they're using this data today to evaluate how much to charge you for your policy, and even if you get a policy. But it's not just the insurance industry that's using it, right? Our peers, and I think that you mentioned this, Dan, third-party risk is a very, very real thing, right? So our peers are evaluating us. And I think your platform, Kent, will tell you like how many people are following you, right? So how many people are evaluating your security, your risk, you know, exposure, or your security posture and those kind of things. But I think it's critical to know it's insurance companies, it's our customers, and it's also the bad guys. And you mentioned this, Kent, right? So the bad guys, they're seeing this data, right? And they're saying, hey, that's an exploitable vulnerability right there. I'm going after these guys, right? So yeah, in any event, I think it's material. And I just really have a huge appreciation for what you do and what you guys do, Ken. And I think it's valuable information. And I'll just add a little bit about, like, there are 10 categories that you evaluate all companies on, and then aggregate that into a consolidated score. And it's that risk score on the previous slide that we talked about. You know, if it's low, if it's an F, it's more than 7 times the likelihood of a data breach, right? It's just incredible. And that's based on real information, right? So the insurance companies are using this to evaluate like how stringent to be in those kind of things. But I think it's good information. So next question, Dan, why don't you start with this one? But is it legal to pay the ransoms today?
Well, I'll apologize in advance for giving a lawyer's answer to this, but the short answer is it depends. It can be legal, permissible, but it can also be illegal and subject an enterprise to significant sanction. In particular, and many people may know the acronym OFAC, OFAC, which stands for the Office of Foreign Assets Control, an agency of the U.S. Department of Treasury, which has responsibility for the transactions involving foreign assets, including in particular through publishing a list of blocked persons that U.S. parties are prohibited from doing business with. You know, just as an aside, in the current tragic environment of the last month or so, one finds the government of the Russian Federation on OFAC's list these days. Kind of a recent.
And they didn't used to be, right? They are today, no. And they weren't like a month ago.
That's right. And the sovereign fund and various other affiliated entities. But in all events, OFAC publishes this list, and in general, doing business with one of the parties that's on that list can subject the party to sanctions, including civil penalties that can range in the tens to hundreds of thousands to tens of millions of dollars. So it's a very profound thing. OFAC has given guidance going back about a year or so ago as an initial warning to businesses who, were paying ransomware as the ransomware phenomenon has just exploded over the last couple of years. That guidance has been updated as of last fall. It basically underscored the point that there is liability from doing business with such entities. Further, at the time that updated guidance was issued, OFAC levied sanctions against an enterprise called Suex, which was a cryptocurrency exchange. And that particular penalty was notable because it was the first time that an entity was held liable for such a ransomware participation, even though it was not the perpetrator of the offense. It was merely a counterparty, if you will, but its actions by permitting the exchange of cryptocurrency as part of the ransomware transaction exposed it to that liability. And so that is a warning to lots and lots of businesses and enterprises that merely because you're not on the list doesn't mean you are free of sanction if you engage in or facilitate transactions with parties that are. Along with that specific action, guidance, this updated advisory from OFAC stated very clearly and explicitly that the U.S. government policy is to strongly discourage the payment of ransom and ransomware attacks. It's not an outright prohibition, but it's a strong discouragement. And in particular, OFAC may impose penalties on violators on a strict liability basis, meaning the party doesn't even have to know or be aware that its actions violated these prohibitions. So that represents a high degree of risk. Now, at the same time, and I'll just add another point or two here and then invite reaction from the rest, but OFAC also shared what it considers to be mitigating factors in terms of exposure to liability from parties that may have transgressed these prohibitions. And they include things like having a sanctions awareness compliance program in place so that there's demonstration that a party is cognizant that it's not to do business or engage in interactions with the prohibited parties. It includes specific suggestions on improved cybersecurity practices, the very things that we're talking about here that will have a bearing on insurance coverage. And thirdly, a major category, it strongly encourages self-reporting and cooperation from a party that's subjected to a ransomware attack. Now, this is challenging. And I'll read you just one sentence from this advisory because it's very instructive. OFAC will consider a company's self-initiated report of a ransomware attack to law enforcement or other relevant government agencies made as soon as possible after discovery of the attack to be a voluntary self-disclosure and a significant mitigating factor in determining an appropriate enforcement response. So there is strong encouragement in this guidance to apprise law enforcement, whether it's the FBI or OFAC itself or other entities within Treasury, but one recognizes that that can be a very challenging thing for businesses because when you're subjected to an attack, particularly a ransomware attack, it is hard to make yourself, pick up the phone and call law enforcement and report that, particularly if you've gone ahead and made a ransom payment to the offending party and recognize that that may expose you to some further.
And I think a valid point, Dan, is like most enterprises and people, not unlike myself, right, are more interested in returning to normal operations of business than doing things right. Unfortunately, that's the reality of it. And I will share a quick story. Like my perspective on this used to be, don't pay the ransom. That's because you're going to end up on a list somewhere, and the bad guys are going to be like, this person's going to pay the ransom, so let's attack them again, right? I'd be like, just don't do it, right? But then it occurred to me, it's really a business decision, and a lot of businesses and the management team of businesses, they're evaluating the cost of not doing business versus the cost of the incident that occurred. And a lot of times paying the ransom is a less costly event, and you can return to doing business in days instead of weeks, right? Or months even. But that said, it's a business decision. So what I determined is that as a service provider, our job is really to make not paying the ransom the best business decision. And I think it's very, very meaningful from that perspective. But Charmaine, just before we toggle to the next question, I'd love to get your input. One, will the insurance companies pay the ransom? And two, how do you ensure that you don't violate OFAC?
So again, if you are working alongside a cyber insurance company with a cyber policy, you're not alone any longer. So your job is to report that claim as soon as possible, as soon as it happens. At that moment, instantly, they will assign a legal and a forensic panel to you to make sure that what's happening, what's going on, how far did they go in. While the legal is trying to figure out what actually happened, forensic will go in and see what all they have touched so far, right? As much as they can find out. Now, of course, at the end of the day, yes, as a business owner, you can decide, being that it's not on the OFAC list, which, the insurance company will work with you. But again, going back to that question, paying, would it solve your issues immediately? Would they not come back after you? So I think the bigger question is that to avoid vulnerability of ransomware, it goes back to that cyber posture again, to have backups, to have all those cyber hygiene that we all talked about. Yeah.
Yep. And I appreciate the perspective. What I was going to say, Dan, real quick is, and you'll love this. I know we've talked about this before, we often ask customers, like, who do you call first, right? So this is the practice. That's a mantra of ASMGI's. So we advocate for doing tabletop exercises. Don't let the time you have an incident be when you try to figure out how to do all these things. But who's the first person you call? And this should be articulated clearly in your incident response plan. Who's the first person you call? Your insurance company or your attorney? Because they're both really, really high on the list, right? But I think your response to that, Dan, was very appropriate and applicable, right? If you contact your attorney first, it's subject to client attorney privilege. And so you can have a conversation about, hey, this just happened. What do I do now? Right? What do I do next? But a lot of insurance providers, have clauses in the policy that say you have to contact us first and everything. But we generally advocate for, let's talk to your attorney first, because it's privileged anyway, right? So
I do think, as a general rule of thumb, that's a prudent thing in order to cloak communications downstream from that point in privilege to the extent possible. Now, there may be times when information has to be disclosed in a way that essentially moves it outside the scope of the privilege, but that is a judgment that should be made advertently and on a conscious basis. And the way to assure that the business decision makers can do so is to start by engaging their counsel right at the top, and then they can make specific decisions, on a data point by data point basis. Certainly, it is going to be the case, in the vast majority of circumstances, that the very next phone call is going to be to the insurance coverage, party, the broker or whomever, if that business does indeed have cyber insurance. So I think those are calls 1A and 1B in my mind.
Yeah. Yeah. So you can see, to members of the audience, we put a lot of emphasis on this. I think the general consensus in the industry is it's not if, but when, right? So that's, and I think it's important to really understand what to do in case you are breached. But let's talk a little bit about what makes a good cyber policy. Like, how do you make sure that the right things are in there, and what should you look out for? Why don't you start, Charmaine?
A standalone or a comprehensive policy, this is what you're looking for, will have coverages that are addressing today's cyber threats. And these cyber policies are constantly being enhanced as hackers are finding new vulnerabilities to disrupt businesses. Cyber insurance becomes that financial cushion for a company that's victim of cybercrime and threats. So data breaches and cybercrime, including ransomware, can have ripple effect of subsequent cost, expenses, fines, losses, and liability lawsuits. So you want to look at, now there's two aspects to that. There's first party aspect, which is you yourself, your business, and then there's third party, in which is the liability that you have from your customers and vendors and other third party sources. So in first party, you will have in a comprehensive policy coverages like IT forensic, credit monitoring, ransomware, business interruption for the profit losses, network damage, vendor panels to provide you with the resource to take care of the incident that's happening, along with cyber risk management services. Now you can choose to utilize those for small companies, or you may already have one if you're on a bigger side of things. When it comes to third-party cyber liability, you'll see things such as defense and indemnity from customers, from regulatory bodies, breaches, privacy law violations like GDPR, defense and indemnity for PCI fines, assessment, media liability, and things like that. So it's no longer just the network security liability, but there's a lot of other liabilities that are in place that you want to make sure that they're in your comprehensive cyber policy as well.
Yep. Dan, do you have any advice for the audience about like our customers, right? That we put a master service agreement in generally with our customers. Sometimes it's theirs, sometimes it's ours, but there's always a redlining process involved, and they always come back with comments. But and generally they're about liability, and specifically cyber liability or security liability, right, or confidentiality and those kind of things, and indemnification, right? Who's going to pay if there's a cyber incident? Who's going to pay for it? And so we have a lot of customers that have asked for unlimited liability and indemnification and these kind of things. But can you reflect to the audience on what's really appropriate and what's normal and customary in that regard?
Sure. Well, so to sort of place this topic in a little context, having been practicing in this arena over a span of time, I can recall in the past in drafting and negotiating lots of software and IT service type agreements, when the subject of data and rights associated with data or security associated with data was literally an afterthought. I mean, nobody thought twice about it. Oh yeah, whatever, you're responsible for that. Particularly back in the day when software was typically installed in an on-premise environment. I mean, it was within the four walls of an entity's own facility and enterprise, and they may have had an IT staff and they were responsible for running it. Well, again, in a world where everything now has moved to the cloud, everything is as a service, those interactions with third parties are much more prevalent, and consequently, the data that's being exchanged between contracting parties in the course of, every stripe and variety of, SaaS or hosting relationship that an enterprise may have is documented in an agreement. And that agreement, one way or another, will apportion risk associated with what may happen to that data, who gets access to it, whether it's exposed in a way that may violate law, as Charmaine was suggesting a minute ago, with data privacy laws that have come into effect in the last few years, GDPR for Europeans in particular, the PIPL law in China that just took effect last November here in the United States. Now California's CCPA, California Protection Act, and similar statutes in Virginia and Colorado. So all of that has elevated the risk associated with what happens to that data, and thereby made those provisions in the contracts between businesses and their software and IT service providers that used to be an afterthought, they're now front and center. And both in terms of responsibility for how data is managed, secured, stored, transmitted when it's exchanged, and to your specific example, Steve, those liability shifting provisions like indemnification, warranty for what may happen in the event that there is a data breach, limits of liability. All those are considerations that have their significance has been elevated as this interconnectedness and the risks associated with data flying around have grown.
So, yeah, we'll keep moving in the spirit of time because I know we're running low on time. So I had one more question about what can I do like right now to improve my security posture? So I think this can be really helpful to the audience, just understanding there are so many different frameworks. If you have compliance regulatory requirements, obviously you have to meet those, but the frameworks that are out there, they have all these controls in them. I'm curious from an insurance standpoint, like what can you do right now to lower your premium or ensure that you'll get a premium or get a policy or a renewal?
So regardless of the size of company, there are some basic cyber hygiene we all can practice to digitally protect our companies. Having two-step authentication or multi-factor is a basic security tool we all should have for remote access, networks, emails, file backups. Cloud and segregated backup is another necessity to restore business when we face ransomware, for example. Other security foundations include email and web security, password manager, EDR tools to monitor endpoint traffic, incident response plan, along with cyber awareness training for all of our employees, as human inability to recognize the threat can lead to a successful attack. Of course, you'd want to add comprehensive cyber policy to mitigate financial risk of the cyber attack. So know that these digital attacks are not covered in the general policy. It helps to have a very good cyber hygiene to be practicing on a daily basis for individuals as well.
Yep.
And at risk of sounding like a broken record, I am going to say again, for most businesses, if you haven't looked at the relevant agreements you have in place, both vendor and customer, upstream and downstream, particularly those that may entail data being exchanged or hosted by a third party or stored, you should look at those and become aware of where risk rests under those agreements. You may not be able to do anything about that today, but awareness is the first and sort of necessary step. Perhaps renegotiating better terms with that vendor, or finding another vendor who will provide better terms on that. And ultimately, for those risks that you can't bargain away through third parties, then you can fashion an insurance policy that appropriately covers that exposure.
Right. Yep. Charmaine, are there things that would absolutely, you would be denied if you didn't absolutely do these things, right? Are there things like that?
Yes, as a matter of fact, just today, I'm working on a policy. They do not have MFA turned on for their remote network applications, and it's a requirement. They're not going to get it. Another basic necessity is cloud or segregated backups. If you're telling me that there's no backup, and if I get hit with a ransomware, then what, right? In today's digital aspect that we live in, we should be able to recover our data very fast. And backups and MFAs will, hold that vulnerability, push it farther, and then the backup will allow you to come back online a lot sooner and avoid ransomware.
Mm-hmm. Is there anything you look for, Kent, that is critical from that perspective?
I mean, I think a very relevant topic, right, that's being talked about and almost baked into some of this is, the third-party risk management. It's becoming more and more of a focus with the recent events. So now the questions are being asked, what are you doing today? Do you have a program in place? Can you walk me through what that is? Are you actually doing your level of due diligence? These conversations are coming up, and I don't see them stopping anytime soon. So, besides what everyone's covered here, it's really that key piece now that I think everyone's starting to realize is the weakest link. I mean, we could be as secure as we want, invest tons of, dollars into different tools and projects and personnel. But if your weakest link is essentially one of these third-party vendors that has access to your network, it kind of all goes to waste.
Yep. That's a good lead into this next slide, and we'll do this really quickly and open it up for the audience questions. But I want to get in this last question because I think this is an area that is really moving up the food chain. So I'll just paint the picture of a scenario. Let's assume that your strategic growth is based on acquisitions, right? So you're going to buy 5 companies this year, and that's how you're going to grow, right? What if? So this is the scenario that I want everyone to consider. What if you buy a company that's got a really poor security posture? Are they going to raise to your security posture, or are you going to lower to their security posture? Right? What implications are there from a cyber policy standpoint if you acquire an entity that has, bad security hygiene?
I just make one quick observation in response, Steve. Over the last couple of years, in the M&A arena, focus on cybersecurity practices, rights and data have become a much more prominent part of what historically we characterize as kind of routine due diligence in M&A transactions. That buyer is looking hard at all of those characteristics that may affect risk associated with the online activities, data rights, digital presence of the target enterprise. Because obviously the buyer does not want to buy additional risk if they can avoid it. And it also affects all the other features of merger agreements or asset sale transactions on protecting the buyer.
Yep, that's a good point, Dan. And to an extent, I agree with it, but I'm going to give you some examples of some cases where it's exactly the opposite to that, right? So I still have buyers that are telling me, I don't care what the security posture is, right? I'm going to move forward with the acquisition based on value, right? Based on revenue that they're going to add to my bottom line, because I'm still going to grow, right? And so I become more valuable as a company, theoretically. But the implications are, and this is why we advocate strongly for cyber due diligence, because there are implications that affect value. There's no question. And the Verizon acquisition of Yahoo is a great example of that, right? Yahoo had not one, but 2 data breaches in 2017, 2016, I think. But in any event, $300 million, that was the impact from a value perspective to that deal, right? but even smaller deals. So, if we interface with a manufacturing company, for example, and they're going to buy 4 or 5 companies in a year as a growth strategy, right? They're saying, yeah, I don't really care about cyber due diligence, right? That's and we're like, it's critically important, right? You don't have to do a lot of it. So I think the due diligence factors that you're referring to, Dan, legal and accounting, that due diligence has to happen. It's a standard part of the M&A process, and it always has been. It's kind of baked in, right? And companies are going to spend a decent amount of money. But I would make the point that I think cyber due diligence is critically important, and it can have an impact on the value of a deal. There's no question at all. And it can also impact cyber insurance, right? If you have a cyber insurance policy today and you get denied tomorrow, that's a bad thing, right? So, but I think it's a very real scenario. So let's open it up for audience questions. I have several of them, and I'm gonna just try to pull them up real quick and go through them as we can. So we covered. So one of them is, what are cyber insurance providers looking for? I think we covered that one. What risks or pitfalls may insured parties experience when filing a claim for a coverage following a cybersecurity incident? So I think this is a valid question. Where can people get into trouble when they try to file a claim for a cyber incident?
Let me touch on one concrete example of that we had just recently with a client. And it's the reality of making a claim when you have a policy in place and think that it should be covered. This involved an incident involving fraudulent payment. An entity was communicating with a known supplier involving a payment transaction. A known representative of that supplier, a perpetrator, inserted himself in the middle of an ongoing email string and provided a, quote, new account number to which the payment was to be directed. It resulted in almost a $500,000 fraudulent payment going to the wrong party. The entity that was harmed thereby, fortunately, had a cyber policy that included fund transfer fraud. I mean, it seemed kind of right on point, specifically including coverage for fraudulent instructions, which again seemed precisely on point. But there was an exclusion in the policy that required that party to have authenticated via a method other than the original means of request to verify the authenticity or validity of the request. So if you think of it in the context of a wire transfer, before you fire off that wire transfer, call a human being at the other end, or whatever the alternative means may be. In any event, the insured party had not undertaken that separate means of authentication, and the insurer denied coverage. Now, ultimately, a resolution was bargained to that was slightly better than zero, but it was a stark illustration of how those exclusions can operate if somebody isn't meticulous in adhering to the terms of the coverage.
I'm going to chime in really quickly here, and I completely agree with Dan. It is very critical to be honest and open about the things you say at the time when we're doing the underwriting, right? Because at the end, realize cyber insurance is still an insurance company. They're going to want to do whatever it takes to not pay the claim, just like all the other insurance company we know and we deal with. So, there are questions regarding what Dan gave example to is called invoice manipulation. So there are security related questions for social engineering. And if you checked yes, then that being one of the questions there, that did you confirm a newly communicated information, and that can lead to denial of coverage. And it's right there in the policy, it's right there in the application. And I'll give you another example, MFA. A lot of people say, yes, I have MFA. They just check. no, we have to make sure that it's turned on wherever they're asking it's turned on. Because at the time of doing the due diligence or working on the claims, if that wasn't so, or if it was turned off, then immediate denial of claim right there as well.
Yep. And we are at the top of the hour, so I'm just going to keep moving and skip over the closing remarks. I want to talk about this offer a little bit because I think it's a great benefit to the audience. And for anybody who's attended this webinar today, that will offer a gratis risk report. And it's important to understand that this is the same view that the insurance companies use. It's the same view that your customers are using. It's the same view that the bad guys are using, right? To figure out how best to exploit you and those kind of things. And so if you're interested, we're happy to share this information with you. And Kent, this is a great manifestation, and I love what you guys are doing, and I love the ability to be able to leverage this to help people understand what their outside in risk looks like, because it's such a critical, there are clearly things internal. So, the metaphor that you used was the outside of the house versus the inside of the house. There, pick up your things. I get all of these things. There are clear implications to the internal security, but the outside security is so critically important because, the bad guys they're using these passive scanners to look for a place to, breach you, right? To exploit a vulnerability or whatever. If you have an RDP port open, the bad guys are going to run these scanners and they're going to say, hey, this guy has an RDP open. I just, paid $100 for a kit that I know how to, follow step 1, step 2, step 3, and know how to exploit this vulnerability and those kind of things. So I think it's a real thing, but we'll give a report that'll look a lot like this, a summary report that shows you what your overall grade is. And, we put up a slide before that shows if that grade is an F, you're 7.7 times more likely to have a data breach, and we can help you turn that F into an A, right? And that will ensure that you get a cybersecurity policy. It will actually help on a third-party risk standpoint where your customers are evaluating you, and it will limit what the bad guys do. They'll probably skip right over you. It's kind of putting that security sign in the front yard, right? That's so I did want to mention that. I want to make a few announcements real quick. So AI Med, I don't know if anybody's heard of it, but we're doing a program in May in San Francisco. I'll actually be speaking at it, and I'll have a cyber panel joining me there. But it's all about artificial intelligence in the medical community, and how to increase the value of the medical service delivery, and the view of the patient and those kind of things, and how to use artificial intelligence and machine learning to do that. This is today's panel discussion. This is a private event. But coming up on the 21st of this month, we're going to do a webinar, and we're using Log4j, but as the title, we all know about zero-day events, and it's today or yesterday it was Log4j. Tomorrow it's going to be something different completely. That's but we're trying to structure a program to help you improve your security posture, your security hygiene, and fight back against these 0 days and make sure that you're not at risk from them. And there is a mechanism to do that. And there are, scanners. So again, tomorrow it's going to be a different exploit. There's no question. But Log4j has a very long tail, and we have customers today, it's gone today and it's back again tomorrow. And the reason is that people are downloading and installing things that are vulnerable to Log4j. So when you run scanners to identify if you have a vulnerability, it could be gone as a one-time event, but that doesn't mean that you're done, right? Because it could be back again tomorrow. In any event, and this is the AMI thing. So if you're interested in any of these programs, please let us know. And we do have a blog that was written by Charmine that we're posting on our website, or have already posted on our website. So please check out our website and read this blog, because it's very informative, and it's very it's spot on as it relates to gaining a cybersecurity policy and why it's important, and just having it in place. And I want to thank everybody again for sharing their time with us today, and thank you for this great panel. your wisdom is incredible, and it's really great to be able to deliver this kind of value. Thank you.
Thanks, everyone.
Much.
Thanks,
Take
all.
care all.
Cheers.
Thank you. Bye.